Today's conversation is with Tom Tirman, the CEO of PARSIQ. PARSIQ has raised over $3 million. We talked about their fundraising strategy. Tom is based in Estonia, and we talked about the Estonia's policy on e-Residency, attracting a ton of crypto and remote projects into Estonia, and what is making Estonia a standout smashing success for Web3 companies, both incorporating and then people actually moving to Estonia. We talked about, of course, PARSIQ, what they're doing in connecting the layer one, the data from the layer one protocol, smart contracts and chains to the front end interfaces for Web3 developers. We talked about why this is a big deal and what he sees as exciting other uses for tokens, both specifically for PARSIQ, but also tokenomics more generally, which is kind of shocking hearing his perspective on it. 97% of all tokens out there effectively don't have any practical use. They're just correlated to the project. And so it's all speculation, which is interesting to hear. Hope you enjoy this conversation. Here is Tom Tirman. All right, Tom, excited to be chatting with you. I love what you're working on. I love where you are. Why don't we start there, just out of my own curiosity. You're based in Estonia, born and raised, as you mentioned a few minutes ago. What do most people not appreciate about Estonia? Certainly, Estonia is a small country, 1 million people. It's been on the map recently for its adoption of crypto-friendly policies. How do you describe both living there and then the general attitude of the people there, the culture? What's your take?
Yeah, well, Estonia is a small country. We're just like 1.3 million people. We're somewhere between the Scandinavian countries and the rest of Europe. So it's an interesting country to live in because we were under the Soviet Union for a long while, and only in '93 we had like capitalism and free markets come in, but due to the small population, we've been able to be very organized, and that's why the digital advancements there are like they are. I think we have one of the biggest numbers of unicorns per capita in the world.
I like that, per capita. Interesting. And then have you noticed, since you have been living there, or even maybe a generation before you, a massive change in the day-to-day living through the either recent changes in policy or continued integration of capitalism after the 90s?
Yeah, and the 90s were a really interesting time. I remember when the first McDonald's was opened in the 90s and so on and so forth. But again, due to the small size, it was very easy to integrate with the rest of the world. And you could say that the government and the people, they're very nimble because it's just simpler to integrate such changes, test them out, and make them successful in a smaller country.
Yeah, interesting. And tell me a little bit about your background. So you're now running PARSIQ. What was the early days of the conception of the project?
Well, I come from traditional finance and fintech background. And in 2017, I discovered crypto. Never bought any, but I saw the hype from the sidelines, and I was thinking there has to be something behind it, right? So I started researching the underlying technology, and for me, this is what I thought, that this might be my opportunity, because I was too young during the collapse of the Soviet Union when there were opportunities in Estonia, new types of businesses, new types of markets. Then I was too young during the internet revolution, so I missed that boat. And I thought this is my shot. And as the more I researched, the more I believed that this really has the potential to disrupt so many industries globally. And of course, I knew I could be wrong, so it was a pretty high conviction bet, but I decided to go for it. And in 2018, I met my co-founders, and we wanted to get into the space. start our own company, startup, and we decided that the blockchain data niche is untapped, because if really a lot of financial assets will be tokenized, financial systems, financial rails, not just financial, but you think social, gaming, supply chains, and all that data will be on chain. That data could be worth a lot, and everyone will need easy, efficient access to that data without any kind of friction or complexity. And we thought we'll go that road and see if we can solve these pain points for future builders in Web3. That's how PARSIQ came about.
And what specifically, how do you articulate exactly what PARSIQ is doing? And what are paint me the business model a little bit, how much you guys have raised, what the revenue is, how it sort of works?
Well, it's pretty much a B2B software company. And we provide data infrastructure for any projects, any companies building in Web3 or integrating with Web3. And the main idea is that any kind of data you need from the blockchain, history of transactions, what smart contracts are doing, calculating things like total value locked, APYs, ROIs, and so on and so forth. You should be able to get all of that. Doesn't matter if it's real-time data, if it's historical data happened years ago, and easily, without all the hassle of actually, going through it manually, without having to, host your own blockchain nodes to get access to that data, without having to develop complex solutions in-house, spend developer resource, time, money. You just come, you click, you write a line of code, and you get everything you need instantly. And why? Because if you imagine a Web3 product, Web3 application, you have the blockchain layer, which are the smart contracts, the blockchain transactions, and then you have the front end that the users see, and everything between that is the back end. Somehow the data from the blockchain has to reach the back end and the front end for the user to see what they're doing. Their deposits came in, they made a swap, they took a loan, anything. And it's actually a pretty big pain point for developers to get proper data from a solution that is scalable and doesn't require extensive in-house development. And this is pretty much what we went for. So you have your smart contracts, your blockchain addresses, you have your front end, everything else you can easily build on PARSIQ.
Got it. So you have the smart contracts in the back end and the front end, and you're the pipeline between those two. So you're connecting both to the front end. Would this be like a JavaScript API in the front end that then connects to PARSIQ that pulls in the data, and then you're pulling it from the smart contract? So do you view the majority of the technical load that PARSIQ is built is the integrations with the smart contracts?
So yeah, we have a RESTful API that you can take an API key and get any data you need and even integrate it into your application with a line of code. Then what we have done is we run full nodes of all the chains we support, and we have plugins, our own software embedded into the nodes. So we see every small fine-grained event that is happening there. We are indexing all of them, all the way back to the genesis block, to the very launch of the chain. And we have all the transfers, calls, logs, everything that's ever happened on the blockchain indexed in a database. So you can easily, in milliseconds, get data from the last 1 million blocks, 2 million blocks. And if you're not interested in historical data, you can set up what we call triggers, which is you put in your conditions, what exactly you're interested in monitoring on any asset, on any address, on any smart contract. And if that happens, we push the data to you. So you don't have to query the APIs all the time. We just push it by webhooks to your site. So pretty much we take care all the data side. You don't have to think about it.
And where are you? So you run full nodes. Is that the single source of data that you're pulling from, or
Yes, yes. The nodes, the blockchain nodes are the source of data. We have a distributed pool of nodes, so we don't run a single node of each chain. There are many to maintain data integrity and to make sure that if a node has some problems with syncing new blocks, if a node crashes anything, then all our clients and users will still get the relevant data.
Hmm. And was this an evolved concept, or this was the idea that you initially had up front when you started the project?
It's evolved a bit. We started with like real-time monitoring. So you could put any address, any smart contract under monitoring. You can monitor millions of addresses or just a single one. And you put in filters and conditions, what exactly you're interested in, like incoming transfers, outgoing transfers, smart contract calls, amounts above a certain threshold, below a certain threshold, specific asset sets. And you can monitor and get that data to we had direct integrations with things like Google spreadsheets, Telegram, Discord. So in real time, you would know of certain events, and you can feed them into any business tools like accounting software, I know, QuickBooks, Xero, CRMs, anything. And it was kind of like Zapier for blockchain. If this, then that. If something happens on the blockchain, then do this. So bridging like these two sides, the Web3 side and the legacy centralized systems. And we managed to get quite a lot of traction, but it wasn't enough to solve some of the use cases that a lot of like enterprise grade clients wanted. And that's why we did the developer API. We indexed chains so we could not only provide real-time data, but also historical. You can go back in time and collect any data you want. And we even provide a storage layer, so you can store that data on our side to maintain state and run calculations. So pretty much a full backend for your Web3 app.
Interesting. And so do you still consider it a pseudo like Zapier Web3 type experience?
Yeah, we still have that product. It has a front end, not only for developers, but like a wizards and templates, this WYSIWYG non-code solution. But developer teams want more robust things. That's why they prefer coding. And for them, we have the API and SDK. And the individual traders use the front end, the Zapier solution, to be able to arbitrage, get the earliest possible, even at the mempool level, notifications about some kind of whale transfers, large deposits to exchanges, anything that would give them an edge.
Gotcha. And who's using PARSIQ now? Like what type of companies or what projects in particular?
Mainly the majority are crypto native. So we are talking about Web3 applications. This is DeFi protocols, anything from decentralized exchanges, lending services, decentralized investment services, NFT marketplaces. The list is long. And of course, some centralized services like wallet providers, even hardware wallets, exchanges, custodians, peer-to-peer marketplaces.
Interesting. And how's the project going? I know you guys have raised some money. What's the revenue like, and how do you guys specifically price the product?
So when we started in 2018, we bootstrapped. The company was self-funded by us, the founders. And in a year, in 2019, the money started running out. So we thought now it's time to fundraise. And we went to some traditional Web2 equity VCs just to get some feedback, but it was 19, the depths of the bear market. And whenever they heard the word blockchain, crypto, they say, no, it's not for us. Some said crypto is a scam, and so on and so forth. So we modeled we found a group of private investors and angels who were willing to invest. It was around $1.5 million. And for this, we made a token. And we created a token for PARSIQ, and we fundraised using the token, which is a utility token of the platform. And a year later, in 2020, when everything picked up, we had users coming in, we had clients coming in. We have over 200 corporate clients right now, and almost 60,000 registered users on the platform. And we did another fundraising round, which was backed by Binance, the Solana Foundation, Mindworks VC, and Evan Cheng, who was the head of engineering of Facebook and the head of research at Novi Libra at that time. And the pricing model is pretty much a freemium subscription model. So you have a free plan, and you have the paid plans up to the enterprise level. And there is also a role for the token. So the token is an access token. So if you hold PARSIQ tokens, you can use a certain amount of API calls requests for free. And the more you hold, the more you can use.
Interesting. And total, how much did you guys raise total?
The total was 4.5 million.
And so first round was like, hey, we're running out of cash. Second round, it was you wanted to raise money to grow, spend money on marketing, hire more developers, that sort of thing.
Yeah, it was time to scale. Mm-hmm. And also since in the first round, we really, these were all private individuals, mostly not even from the industry or not closely related to the industry. So we thought we need to get some strategic backers who could help us in other ways than money, because our runway was good actually. And we didn't necessarily need the second round, but we did a symbolic 3 million round just to get these strategic backers who could help us open some doors and get us into bigger ecosystems.
To what degree has that played out? Have they been exceptionally useful, moderately, somewhat, not very much?
Oh, as always with the investors, it's hit and miss.
Yeah, totally.
But I can't complain, because a number of them really have been helpful in different ways, each in their own ways. So we are still in close contact, and I'm pretty happy with our cap table.
Yeah. Interesting. Well, thanks for sharing. How do you feel just generally about the space now? So you guys are in a very specific application layer, connecting the backend smart contracts to the front end Web3 developers on like a B2B space. Do you pay attention to the market actively? How do you sort of narrate your thoughts and maybe anything contrarian on where we are today, given that's August 18th, the market's been down for a few months at this point? It's the major hacks are not that far in the rearview mirror, or collapses with Celsius and Luna. Do you have a general gestalt or view of the landscape today?
Well, we've been through it's now the second bear market for us. So we built throughout 18, 19, and as hard and bleak as that was, I feel like now the whole industry is in a much better position. Back then, there was no guarantee that the industry will even survive, the crypto will even survive this winter. Right now, no one is questioning that. Everyone left during the last market downturn in 18 and 19. Most developers, builders, founders, they just left Web3 and they did something else. And there were really no applications built at that time. Most were speculative bets and the layer one blockchain platforms. Now we have actually some degree of adoption, and seems the rest of the world took notice. And I see a lot of, despite the market conditions, I see a lot of capital inflow of talent into the industry, even now, from the traditional tech world. And I think this will continue and accelerate in the long term. So I think everyone is in a much, much better position.
Yeah, yeah. I heard a number recently that was about 6,000 people total working in crypto, which was strikingly small if you consider like a mid to large size company. Like Google might be what, 30,000 people. Yeah, there's there's a lot of companies that are well above 6,000. And I think of the noise that crypto makes across the world is certainly much larger than 6,000. So the number of people participating, talking, tweeting, blogging about it is orders of magnitude higher than the people actually contributing, building things on a day to day. I would imagine that that's the key number to grow. You know, if you don't have people actively building, then we're not actually doing anything. How have you seen other projects or you guys think about scaling? Are you remote first all day and that's what everybody's doing? Are you guys trying to be local to some degree?
Well, luckily, this industry really promotes this remote distributed team
Hmm.
building. This is why we're quite comfortable. It's really pretty much impossible for a growing company in Web3 to source all their talent, somewhere locally. So we are heavily distributed. We have over 40 people in our team across 3 continents. Canada, UK, US, Singapore, Estonia, Latvia, Denmark, Russia, and so on and so forth. And I think most Web3 projects are the same. And I actually think this is the future, especially in IT, in tech, and in Web3. You cannot source the right people locally. It's impossible if you want to grow.
Yeah, I agreed. What have been some of the challenges through growing remotely? I mean, we take it for granted at Web3, everybody's doing it, but it is still, especially if you're talking about remote outside of your country, outside of your time zone or your continent, and also having it be like, 5 different continents, multiple dozens of different countries. It's much different than a traditional company, which would have a home base in a city, and then they might open up a remote office or the people in the city are working remote, but there's a lot of cultural, language, geographic, time zone proximity that they all share. Are there regulatory, payment, logistical, cultural, technical, like what stands out to you is like, what are the biggest headaches in building a remote team?
Well, obviously, time zones are an issue
Yeah.
because we have to time everything. When Europe is ending the working day and North America is waking up, so that's like maybe a 3-hour range where everyone can meet and discuss things. So yeah, this is not easy, but we manage. Everyone is motivated. Everyone is focused. Everyone tries to be as flexible as they can, because working in a startup is never 9 to 5. You have to you have to be flexible. And obviously there are cultural differences, no cultural problems, but cultural differences. If you compare, like we have team members from Asia, from North America, and from Europe, and there are certain differences, but it's never really been a blocker. Really, because everyone gets along. It just takes a little while to get used to these cultural differences.
And do you guys pay people in the token or do you pay them, everyone's different? And it just like how do you guys structure that?
The salary is usually paid in wire transfer or stablecoin, and then some long-term employees who are key to the success of PARSIQ have token allocations as well.
I'm curious about this token. So I would imagine you would agree that it's possible to build PARSIQ without the token. And I would
True.
imagine you started there. What was the conversation like on debating building this token versus not building it? How did you sort of think through that conversation?
Well, obviously, tokens have, it's a nascent industry. And not everyone who issues a token issues a successful token, right? The majority are actually fail and gain no community, no volume, no traction, and so on. But tokens actually let you fundraise on a global level much more easily. And some investors even prefer tokens to equity because liquidity and the upside potential, since we're in a very, very early in the stream. So I think that issuing the token as a means to just fundraise is not enough, because token needs to have some utility. Now, does the project necessarily need to have a token? No, but you can say the same for over 90% of the projects in the space. The vast majority could have been built without a token. Yet, I think tokens give lots of advantages, and it's not just liquidity and ease of fundraising. It can actually give back to the community in terms of the utility and value accrual that the token model can have. And it just incentivizes participation, easier access on a global level in the project success. Because if the token is modeled in a way that the demand for the technology will affect the demand for the token and the value accrual of the token, then everyone benefits.
Yeah, everyone who has the token would benefit as you build the company. Presumably the token is, how do you think of the correlation there? So if PARSIQ were to raise $20 million, $100 million, you guys are 1,000 people, crushing it. The token doesn't necessarily change in price, but it probably does because more people are using it. How about the economics or tokenomics? How did you structure that? Either discount for people investing up front, or for you and the other founder, appreciating or depreciating? What are some of the most important aspects that you had to decide when designing the tokenomics?
To be honest, when we first in 2019 issued the token, it was a simple pay with the PARSIQ token and get services for a discount model. At that time, very very common. So, but eventually we figured out that there isn't much utility really beyond the payments, and that there isn't much of a use case, and everyone still preferred to pay for the services in with a credit card or stable coins. So we revamped the whole model and made it into an access token. So pretty much holding a certain amount of tokens give you a certain amount of usage of the software, and the more you use, the more you need to hold. But the challenge with that was that we have companies who monitor 10 million addresses on the blockchain. For them to hold like 10 million PARSIQ tokens might not be viable to have volatile asset on the balance sheet to lock up that much capital. And so what we built is a system around it where you can rent the tokens for a time from a decentralized liquidity pool we call a renting pool. And what that means that these companies can pay us fee to rent the necessary amount of tokens for a month or for a year, just like a SaaS subscription, monthly, annual. And under the hood, they actually rent the tokens from token holders who have provided liquidity into the pool. So that way, the token holders get incentivized. They get passive income yield by providing this rental liquidity, and the companies can simply pay a fee just like they would any SaaS subscription, and get the service without having to buy the token. And that way, demand for the token is tied to the demand for the platform.
Interesting. So if the token price were to increase, would that mean the cost to your customers would increase to rent the tokens and thus use the service?
Yeah, we have to manage this manually because of the volatility. Of course, if it doubles, triples in price or vice versa, then obviously it becomes not viable for customers to pay as a service becomes expensive. So we have to manually manage that.
So in hindsight, like take away, extract the lessons from PARSIQ. Like, you know, I I recognize that these are early days, and I would love when people say, "Oh, I wish I could have structured it this way." Do you feel like maybe not having a token connected or pegged to the US dollar, using a stable coin, if you were to redesign the system today, is there another structure you would employ to accomplish what you're trying to accomplish?
Definitely would experiment more. We will still experiment more and add additional use cases and utility for the token, because really most of the token models in the space are experimental. And really, if someone says like, hey, this project, this company's token model is so great that this is why, it will appreciate in price if the project is successful, then no, I don't believe it is so. Because to this day, even for the projects whose tokenomics are extremely well designed, speculation remains the 97% of the token volatility up or down is because of speculation, not because of the tokenomics. Unfortunately, I think it will take years for the industry to mature, for these models to be polished and validated before something really, really good comes along that where it's really, really viable to have a value accruing token without the speculatory
component.
Let's say component.
Yeah. So in your case, the customers don't necessarily extract any value from the token itself. It's like, this is just the way you have to use PARSIQ. You have to pay to rent tokens, and then you also pay to use you pay for the API. So is it two separate bills that a customer would typically be paying?
Yeah, it's structured differently because we have not one product but multiple. So one does utilize the token, the other one yet does not. Although we plan to implement some use cases there. As I said, the tokenomics for a project, even a 4-year company like us, is always a work in progress. So we have ideas how to improve and really build a circular economy around both, the token and the product.
What other projects have you seen? I'm fascinated by tokenomics, generally speaking, and I love to hear your founder's perception on the effectiveness of the token today, how to think about it, the pros and cons going forward. Are there other projects that you like, or you appreciate how they structure the token that seems to be more successful? Yeah. What are your takeaways?
Honestly, in my opinion, the only really, let's say, viable tokenomics is for layer one chains like Ethereum. So there the token makes sense. Everything else, it's like 50-50 here and there. Everyone was heavily praising the tokenomics of Terra Luna for a long, long time, how genius those were and how demand is guaranteed. But we all saw how
that's crazy. What do you feel is the actual impact of that collapse? Like, I know it's just, it's massive. I forget the numbers exactly, but
I think it's like $50 billion completely gone from the market, of value gone. So 50 billion is a big number as you think about.
Yeah. Not just, it's not just 50 billion. It's 50 billion of people's savings that they index on low risk. So if you have a portfolio, you say, okay, 30% is super low risk, 30% is medium, 30% is high risk, 10% whatever. Like, if you have a low risk category and you completely lose that's way different than if you have a high risk category go to zero. Because at least you can, you plan for that, but this is like,
that's the worst thing, that people who are buying Luna, they, I mean, they had to know at least take some kind of risk, a lot of risk, because it is an altcoin. It can go up and down in value in multiples, but the people who actually held their funds in UST, a decentralized stablecoin, pretty much one of the lower risk assets on the blockchain. And I know personally a lot of project teams who had their treasuries there,
wow.
Just because they thought, we cannot keep them in volatile crypto. This is risky. Rather keep it in stable coins, and even stable coins like we saw recently with the Tornado Cash thing, how USDC can be frozen, blacklisted, and so on. But a decentralized stable coin is probably the safest option. And that's really terrible, because you go to place your assets into one of the lowest risk categories to stay safe from market downturns, volatility, and you end up losing everything, every last dime of that. So it's a big blow to the industry, and I think it will invite more faster regulation.
Yeah.
Among other things.
Are there any projects that, I would imagine those projects are just unrecoverable if you lose your treasury? I don't see how, is that that's what happened in folks that is of the projects who put their treasury in, they just.
Luckily not, because not all of them had their full treasury there. They kind of diversified so they can keep going. Some have managed or will manage to raise more funds, but some might close their doors, of course.
Wow. So on regulation, Estonia is famous for, if I remember correctly, early on, like in 2018, when I was running my crypto project, I was looking into Estonia because they would offer like this passport, or like e-passport concept where you can
e-Residency.
Yeah. Can you talk a little bit about that and other influential crypto policies or just regulatory policies in Estonia that have helped shape things?
E-Residency is pretty much what it is. You become a digital resident, not a physical resident, but a digital resident, which means you have an Estonian ID card. And with the Estonian ID card, you can online, being in any other place on the globe, use the same services as Estonian citizens do online, which means you can buy or sell your car online without having to going anywhere physically. You can go to a notary to buy real estate online. You can really pretty much anything. You can incorporate an Estonian LLC, an Estonian company online, and you can do everything that citizens do online. That was the idea. It was very popular among like digital nomads and single entrepreneurs who were working with a team, and it really took off. The e-Residency put Estonia on the map, I would say. Although before that we'd had, Skype and PlayTech, which are unicorns, come from here, around here. But like I said, in Estonia, with a small population, it's just easier to implement these digital advancements.
Yeah, I would imagine. And then what's the effect of that? So you have e-Residency, which is different than a citizenship. So your personal documentation wouldn't be a resident, right? You'd have a different status than that.
Yeah. You wouldn't be a physical resident. So e-Residency pretty much means that you can more easily transact with Estonian companies, you can incorporate a company there to run your remote business through an Estonian company, because we have very favorable taxation. We don't have any corporate tax whatsoever. One of the few companies in few jurisdictions in Europe, which is very good for like all kinds of nomads who who don't have a team and they have a one-man business.
Mm-hmm.
And it's pretty much to get people and talent here, even digitally, to interact with the whole startup ecosystem.
And what's the benefit to Estonia? Are they pulling in some taxes? Are they requiring people to go to Estonia occasionally, or what do you think the upside is for regulators?
Yeah, they don't require people to go there, but if people incorporate companies, LLCs, which has been very popular among remote workers and remote entrepreneurs, you usually have to pay like at least a minimum salary to yourself, which does bring in some taxes to the government.
Interesting. So is that their primary motivation? Do you think the politicians in Estonia were sitting around saying, how can we grow tax revenue and then let's launch this e-Residency? Or I mean, they're so small. Have you met the president or whoever's in charge of this policy? And do you know what motivates them?
Yeah, it's small. So you meet pretty much all kinds of people here in Estonia. It's very, very common. I think it was more to showcase to the world what's possible and kind of be the innovators who help scale it across, the EU, other countries, and help implement it into larger countries. So it would become one interconnected digital system.
Mm. And how do you think they're doing? Are they successful in that mission? Partially, on the way, struggling?
I'd say partially.
Yeah.
Partially. Yeah, there's a long way to go.
Do you think it's
because
go ahead.
Yeah, because other countries who want to also implement similar systems, they are very slow to move. Bureaucracy, a large population, it's always tougher.
And as Estonian politicians outspoken in their support of crypto, have they pushed back on any policies on crypto that make it do you think they're just spot on with regulation, or have they made any errors in your estimation?
They at first, when Estonia was considered a super crypto friendly country, like in 2018, 19, then they actually made it too easy and people were exploiting that. So to get a license to manage digital assets for your clients, so to be an exchange, to be a custodian or a wallet, it was so easy that pretty much half of the world registered their LLCs into Estonia to get these licenses, because then they could operate. And in other jurisdictions, it was much, much harder. And now, as a result, we had tens of thousands of LLCs who never physically were here, and just because of this license. So they changed that. And now, you have to have proper AML procedures. You have to have local representatives, directors, and so on. You have to pay some taxes, and it's much tougher. But I think this is a right move, because what was happening then, I mean, I think half of those so-called exchanges with licenses were scams. Or an exit scam at some point.
Yeah. You don't want to be the global attractor for the lowest hanging fruit. Interesting. And going forward, are there certain people, books, things that you've learned the most over your trajectory that you wanted to share?
Well, the people that I've been on this journey with, I mean, it's really, I can only bring up my team, who have been with me through tougher times, and also some of our advisors who really took a bet on us and helped us a lot, like Mike Zyko from CoinList. He was a tremendous help in PARSIQ becoming from this small unknown project trying to do something big into a more well-known, credible brand that is integrated into the space. So and yeah, big thank you to Evan Cheng, who comes from Web2, from Facebook, from Apple, and he's given his perspective on Web3, and now he has actually left Facebook Meta to build Mr. Labs when they're building a layer 1 blockchain at this point. So I've really been blessed with having a lot of good people around me on this journey, and I've learned a whole lot from them. Because when we
go ahead.
Because when we started PARSIQ, we had no industry connections, no one from crypto, no backers from the industry. It was like coming into a completely new world, and now we have advisors, investors, partners, clients, a lot of them big names in the space, right?
And so what did you do? Did you just email them, cold email them, say, hey, this is what we're building? And it was like right timing, or was it intros or something else?
A lot of introductions from some of the people that I've mentioned. And the rest is like a snowball effect. You talk to people, you work with people, you're in the picture. Social media writes about you organically if you do something well, if you provide value, and then everything, the rest just comes. It's hard work and provide value to the clients and be in the picture.
So true. Well said. I like that. Appreciate that, Tom. And are you active writing on social media, on Twitter or blogging anywhere personally?
Not as active as I would like to. I do the occasional Twitter thread here and there, and some LinkedIn content, which I hope is educational or helpful to founders who are just starting in Web3. And I write some op-ed pieces also here and there. Last one just dropped on Crypto Slate. And I try to do some podcasts and video interviews, but not as much as I probably should. It's difficult to find the time between running and growing startup.
Yeah, totally. I mean, if you're doing something, that's probably enough. I mean, I think the fact that you're writing, tweeting, doing podcasts, it's like there's a certain balance to it, right? There's always a cost of your time. So speaking of, Tom, thanks so much for hopping on, and congrats on all the progress, man. I hope you guys keep crushing it.
Appreciate it. And thank you very much for having me here. It's been a real pleasure.
See you, buddy.
Thank you, Mike.